Okay, let's get to liquefied natural gas. A report from ATB indicates that this country traditionally in natural gas has been a price taker rather than a price setter. But our guest says this dynamic may be shifting with LNG. We're joined now by Mark Parsons, chief economist at ATB Economics. Mark, thanks very much indeed for joining us.
Yeah, thanks for having me.
Just to update us, so there's quite a few projects. We know, obviously, the big one, LNG Canada, is up and running, but there's quite a few projects in the works to export LNG from this country. We are gaining momentum here.
Yeah, it's been a long time coming, but there's finally some action on this front. Of course, LNG Canada Phase 1 up and running. That is not fully operational, but it's gradually getting to full capacity. And then we have wood fiber LNG, Cedar LNG under construction, and a few other projects proposed. Of course, LNG Canada Phase 2, Sealisms, and some smaller projects. So really, we're in a situation where we could be at 50 million tons per annum by the end of the decade, which is actually Mark Carney's goal. This is a structural shift in the gas market. Much needed takeaway capacity to the Asian market. And hopefully we won't be subject to the whims of the U.S. consumer all the time, because it's resulted in massive discounts on our gas.
Yes, and of course we did see infamously Alberta natural gas prices theoretically going negative this year.
Yeah, that's right. So this is what happens when you really only have one customer other than yourselves in Canada. When that storage gets high, there's just no other outlet for it. And that's exactly what happened. You saw some pullback in production. It's coming back, and fortunately, AECO prices have bounced back in anticipation of more LNG takeaway capacity. But really, we need to get into a longer-term situation where we can access that overseas markets. And, we not only need for gas, we need for oil, too, which is kind of related to the decision last week on the MOU.
So I think you said by the end of the decade, we could be exporting 15 million tons a year of LNG in theory?
We could get that to that level of capacity. That's ambitious if all the projects go ahead as planned. But even with the projects under construction, you're getting close to 20, right? So, we're making a lot of progress.
We're still a bit behind, though, because America exported something like 88 million tons last year, 2024.
Yeah, they're a decade in front of us. It's interesting because Canada actually has advantages over the U.S. market. Colder temperatures here, which who likes the cold? Well, data centers do, and LNG terminals as well, because it reduces the power requirements for liquefying. We're closer to market, about half the days for shipping times compared to the Gulf Coast. And then we have abundant, low-cost feedstock and natural gas. So it's, I think we're finally going to be capitalizing on some of these long-term advantages we've always had. We just needed the capacity, and we're finally getting it.
And it's interesting, you may have mentioned the data centers, of course, like the cold because they get hot. And that's Alberta's pitching that. But also liquefying the darn stuff is easier here, in BC than it would be in Qatar, for example.
Exactly. So I think the average temperature in Kitimat is like 7 degrees or something for the year. Gulf Coast, you're in the 20s. Oof. So there you go. Your starting point is a natural advantage. We're colder. And same thing with data centers, of course, because they have to be cooled. We're already cold here.
It looks as though gas pipelines run into less opposition, not none. I mean, we have the Coastal GasLink got into a head-to-head with some members of the Indigenous community, but it looks like gas pipelines to feed the gas to the BC coast are a less contentious issue.
Yeah, Coastal GasLink did still have some challenges. I think we've learned a lot from previous pipeline projects, Coastal GasLink and Trans Mountain Expansion, about how to engage with Indigenous communities. A lot of talk now of Indigenous equity ownership in projects. So I think that's going to be really important as we look at expanding pipeline capacity further.
And of course, the government is all over this. The second phase of LNG Canada has been well earmarked as a favourite project of the Prime Minister.
Yeah, that's right. And I think it's important to recognize that, there's a lot of talk about Alberta, making some progress with the federal government, and that's true with this MOU. But the federal government actually needs this to happen as well to reach their own goals. Mark Carney's talked about $1 trillion of private investment he wants to catalyze. He wants to double non-U.S. exports over the next decade and turn Canada into an energy superpower. Well, how are you going to do that? You can't be hostage to one market. You have to export your product overseas. And I think to realize those investment and export goals, he's going to need the energy sector to get there.
One thing, and maybe this is inevitable, but a lot of the equipment for these LNG facilities gets brought in from abroad. Wouldn't Canada get more? I know there is a lot of work provided for Canadians, but it seems a pity that we're not making more of this LNG liquefaction equipment in this country.
Yeah, I mean, that's true. You got to import a lot of the content. But I think what's important to recognize is that, like with Alberta's oil and gas industry, those supply chains didn't develop overnight. Right? It takes some time. And the more we get into this business, the more likely it is that we're going to be able to fulfill those supply chains ourselves domestically. It's just pretty new to the game right now, and so it'll take some time.
Thank you very much, Mark. Mark Parsons, really appreciate it. Mark Parsons, Chief Economist at ATB Economics.